if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. We're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further.
Pal highlights that global financial markets operate on cyclical patterns. These cycles, driven by debt refinancing, liquidity injections, and economic expansion, typically unfold in 4-year intervals. The current cycle, he argues, is no different. Unless the U.S. somehow pays off all its debt, which is highly unlikely, the liquidity cycle will continue to dictate market behavior. What makes this cycle unique, however, is the role of cryptocurrency. With increasing institutional interest and regulatory clarity on the horizon, digital assets are poised for a more prominent role. Historically, liquidity and business cycles have aligned with peaks in the crypto market, and Pal believes this cycle may extend into 2026. If that's the case, investors need to recalibrate their expectations and prepare for a longer than expected bullish phase.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
As we all know, the US has trillions upon trillions of debt to roll over, as do the Chinese, as do the Japanese, as do the Europeans, as do the British, as do the Canadians. And they're going to have to bring rates lower and increase liquidity to do it.
Right.
And everybody knows liquidity is actually the largest driver of asset prices. So if we have a government shutdown, we will use what's known as the Treasury General Account, which is the US government checking account, and we will drain that. Now there's $800 billion in that, so that's plenty of liquidity to start with. And then if they run out of that, there's plenty of other forms of liquidity. So I think that over time, yes, Elon is trying to stall payments. You know, they've laid people off, they've put people on freezes, all of this stuff. So you'll have less deficit spending. Okay, great, but we still have all the existing debt to roll. Sure. So what we have to do is roll that. So the liquidity has to come. So it's a good thing to do what they're trying to do. We can argue all day whether they're doing it the right way and to the right things and whatever. Yeah. But generally speaking, to be braver in how you lower government spending when you've got this much debt is an intelligent thing to do. I don't believe there's a debt crisis that comes. I just believe it just gets monetized. And so as opposed to a whole debt blow up where everything goes down 90%, we go from a debasement of money of 8% a year to a debasement of 12 or 14% a year. And that's pretty ugly. When I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed, desperately needed. Now they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology, but it's still not easy enough for corporations to do this with ease. So look, it's a very big deal. It will bring in much larger check sizes from much larger players over time. So yes, for this cycle. In terms of cycles, unless the US government manages to pay off all its debt in one go, we're in this cycle. It's been the same repeating 4-year cycle. It's driven by the debt refinance cycle. It's a global cycle. There is no way around that because of the aging population and the debts that we have. So the only thing is, will this cycle morph it somewhat? Of course, they all do. Like the last cycle peaked really early. Why? Because the business cycle peaked early. In March 2021, the business cycle and liquidity peaked. When we go to 2017, liquidity in the business cycle peaked right at the back end of the year, and then it had a blow off top. 2013 was similar. So the last time around was actually the abnormality, and there's always going to be an abnormality. So what is the one most likely to happen this time? Well, if the crypto markets and liquidity peak when the business cycle peaks, and we'll use the ISM survey, the Institute Supply Managers survey, as our proxy for that, we've only just bottomed and we're breaking 50 to the upside. And that's going to take several months or a year or so to get there. So probabilistically speaking, it might push it into 2026. So that's something we'd have to get our heads around, is actually it goes a bit longer than we imagined. So that's what I'm thinking about this cycle. Then we've got to think, okay, is the downside going to be the same? Because we've got new players, we've got ETFs, we've got different stuff. People can put Bitcoin in their 401k. And I would argue we probably have less downside. Bitcoin's downside has been less each cycle. So maybe it's down 50 or down 45 this cycle versus NASDAQ would be down 20, let's say. That would make sense. Now, a whole bunch of everything else will go down 99% or 95%. But what we'll see is the majors going down less than previous cycles. I think that's my most likely outcome. And so it can catch people off guard, because if people are waiting for the bottom of a cycle in 2026 and it's more of a sloppy sideways range and everyone's expecting it to go lower, you can end up having this whole mess where you're very bullish, but you don't own anything. So I think let's see how it plays out. But I think it'll always be different. I'm just trying to figure out where it's going to be different. It's definitely not going to be a short cycle, because we've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which would be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong. But you've got to remember how money works in the economy. Right now, there's all of these pension plans and all of these private equity funds and all these VC funds. They've had no exits. Nothing has gone public. Things like Stripe, still not public. In the crypto land, Circle, still not public. Kraken, still not public. So that we need to see the capital markets open. We need to see money get recycled, and then money can move through the system. So that's one of the issues. So a lot of the crypto-based investments is from the crypto market that releases as the capital goes higher. But of the traditional investors, there's still not enough money. So we're having to bring in new capital, and that might be the Middle East or a couple of others. But we're not getting the traditional investors fully involved. They just don't have money right now. And that's a function of what I talk about when I talk about the business cycle. The business cycle, if you think about it, when the business cycle is expanding, it means people have more earnings, whether it's at household levels or corporation levels. Those profits and earnings get recycled into investments. And that's what drives a lot of this. So we're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further. So I only see acceleration ahead, but it just takes time.
Pal envisions a world where blockchain technology becomes the backbone of the financial system. The tokenization of real-world assets, instant settlement systems, and immutable record-keeping offer unparalleled efficiency. Bitcoin and Ethereum have already demonstrated the power of decentralized networks, with Bitcoin facilitating high-value transactions and Ethereum fostering a vast ecosystem of decentralized applications. The expansion of these networks will play a crucial role in reshaping financial markets.
It's easy to get caught up in YouTube channels or Twitter or whatever. And when you step back, has anything really happened? I mean, Bitcoin's barely consolidated, barely. And people, because everybody's hopes and dreams are in this trade, right? This is I call it the greatest macro opportunity of all time, or greatest macro trade of all time. But also, most of us have most of our wealth in this trade. So it matters. So people are going to be incredibly emotional about this, because if we get through the other side and you do the right things and you don't fuck it up, you can make a lot of money. And so they think about their future self, and they're terrified of not getting there. I get it. It's just stick with the program and just be careful and just be patient. I think the difficult thing is most of these people are not us. So these are younger people with no chance of buying a property, who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism, or to put it in a more positive term, it's a more speculative economy because there are opportunities there and they need the opportunities to leverage. So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine. But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. But I think you're right. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. How we create network value is either by number of active users, or it's also the total value transacted on a particular chain. That combination explains the value of these networks. So Bitcoin has big size transactions and a lot of users, which is why it's the most valuable. ETH has smaller size but lots of users, and it all flows from that. So real world assets outside of stablecoins tend to be larger single transactions. If you're going to take a slice of a bond, or credit or something like that, it tends to be you stick in $100 million because you're a financial institution, and you don't do any more than that. So it's a high value, but only one or a few nodes in the network are using it. So yes, they're good, but they're not everything. So they add value. Gaming, on the other hand, much smaller values, gigantic volume size. So there is a balance between all of this. Now, over time, we will see the entire financial system go onto blockchain rails anyway. So it's not just the tokenization of real world assets, more so the hyper efficiency of putting equities, all bonds, everything on chain as an instant settlement system, proof of ownership, custody. You get rid of so many middlemen. So that's coming, and those markets are trillions upon trillions of dollars. So yeah, it is important. Gaming's important from another perspective, because that's one of the large communities of Web 2. Social media being one, gaming being another, music being another, sports being another, that will eventually migrate across to this world. And all of those come with like 1 billion users plus. I mean, a big game can have 1 billion users. A big pop star has 1 billion fans. A big sports team has 1 billion fans. So these are very big things. So we get a immutable source of truth for all forms of information, whether it's the government finances or who owns the security, whatever it may be. And so it is obvious that a source of immutable truth is better than a concealed lie driven by a bureaucratic machine of the government. So I think over time, it can only be positive. It really can.
Moreover, industries such as gaming, music, and sports, each boasting billions of users, are likely to migrate toward blockchain-based systems. The integration of blockchain into these sectors will unlock new economic models and further drive adoption. Ultimately, Pal argues that blockchain provides an immutable source of truth, offering transparency and efficiency far superior to traditional financial systems. Governments and institutions may resist this shift initially, but over time, the benefits will become undeniable. The transition to blockchain rails is not just an evolution, it's an inevitability. Please like and subscribe.